business about Goldbach levels.
In this Goldbach teaching, I'm going to show you how to read and predict price action using Starbucks and how the public boycott of Starbucks is decimating their stock price and how you can predict and project the price targets for any short trades that you may have in place right now. Now, this is not financial advice. I'm just a random person on YouTube, so please do your own research before putting on trades. Okay, so this is the chart for Starbucks on the monthly. Now, as you know, I have shown how previous stocks such as Tesla, Lockheed Martin, Boeing, Apple, Nvidia are all priced using Goldbach. And this is more of an in-depth teaching, so I'll give you a little bit of background also on how Starbucks is also priced using Goldbach and what your potential price targets could be if you are shorting this stock following the worldwide boycott. Now, a little bit of background education first. What are the Goldbach Dealing Ranges? Okay, the Goldbach Dealing Ranges essentially tell us that every price of stock, forex, commodities, futures, whatever it is predefined by mathematics. And the highs and lows, such as the swing highs and swing lows, are dealing ranges, which are also predefined by mathematics. And there are predefined areas where ICTs, PD arrays will form. So the order blocks and the fair value gaps and so forth. So a little bit of background. So how does Goldbach work for stock? Okay, so if we look at Starbucks history, I can show you how this price formulated. Now, it's important to understand the power of three numbers first. So the power of three numbers are 3, 9, 27, 81, 2, 4, 3, 729, etc. So let's do a hypothetical example first, just so I can explain how Goldbach interacts with stock price. If you have a newly floated stock and it IPOs at, let's say, $1, okay, what the algorithm will say is, if price is currently at $1 and that's the all-time high, what is the dealing range at which the algorithm will offer bids and offers to? Okay, it will offer, because the all-time high for our theoretical stock is $1, okay, it will offer prices between $0 and $3, because $3 is the next power of 3 above 1. Okay, so it will distribute prices between $0 and $3. Once price gets above $3, it will then do a dealing range expansion, and it will say, okay, now the high of the dealing range is $9. Okay, the high is now $9. So the algorithm will distribute prices between $0 and $9. Okay, and once again, if price breaks $9, then the algorithm will say, okay, what's the power of 3 that's higher than 9? It's 27. Therefore, the theoretical high is now $27. Okay, that's how the algorithm deals with dealing range expansions. Now, there are also a number of algorithms through which price will distribute bids and offers. Okay, Algo 2 is one of the algorithms that I teach publicly because it's easy to understand. And now what Algo 2 says is price likes to go from, let me be more accurate. It doesn't like to go. Price is programmed to distribute bids and offers from the rejection block. Okay, it will then move to the breaker block, retrace to the fair value gap. Okay, and then the logical conclusion is, or the logical movement will be to the opposite order block. Okay, so this is a precise version of ICT's 2022 YouTube model. Okay, now I have an in-depth video on how precise we are with Goldbach when it comes to the 2022 YouTube model. And I also have a video on the OTE model and how you can be more precise with the OTE model using Goldbach. Now, if you would like to learn more about Goldbach, there's a link to the official book by Hoppy in the description to this video. And if you would like to be mentored by me and join my mentorship, there's a link to my time and price golden bullet mentorship below. Okay, so now bearing these in mind, let's have a look at the historical price of Starbucks. Okay, so let's find an instance where price was trading below $9 and then it made an expansion. Okay, so this is going back to 2004 now. Okay, so where were we below $9 and we made the expansion? Okay, here. Okay, so this is when we broke $9 for the first time. So I'll just put a vertical line here to make it easy for you guys to see. Okay, so before we broke $9, the dealing range was between $9 and $0. Okay, so let's just make sure this is a Goldbach fib. So let me make sure it's the right way around firstly. So before we broke $9, the low was $0 and the theoretical high, according to the algorithm, it allows it to go to $9. Okay, so before we were here, this was the dealing range. Okay, so that would define by mathematics that this is where the rejection block will form, order block, fair value gap, liquidity void, breaker, mitigation block, equilibrium, and then we reverse it all the way to the bearish fair value gap, bearish order block, bearish rejection block, and the high. Okay, let me remove the extensions to simplify this for you guys. Okay, that's what we care about. Now, when we broke $9 here, we then needed a dealing range expansion to allow price to go higher. So the power of 3 after $9, the one higher up is 27, which means now the theoretical dealing range high is $27. So then we do the dealing range expansion. There we go. So now we have, this is the high of the dealing range and this is the low. We've had the expansion past this point. Now, something you should know about Algo 2. I'm a little bit more flexible with Algo 2. I like it to go from the rejection block to any point, retrace to the fair value gap, and then terminate at the opposite order block. Okay. Now, let's have a look if we had an Algo 2. Okay, and I'm going to label these up for you. Rejection block is here. Order block, fair value gap. So these are partitions. These define via mathematics where the PDRAs should form. Liquidity void. So this is typically the explosive candle after the fair value gap. Breaker. Okay, and I will I won't do every single one. Just to save time. Equilibrium. Then up here you would have the bearish fair value gap, the bearish order block, and then the high, the dealing range. And for the sake of good order, this is the rejection block. Okay, now a new teaching for my public YouTube channel. A fair value gap is very similar to a volume imbalance. Okay, they are very, very similar. Okay, especially when you have new day opening gaps. They are the same thing, right? As a volume, as a fair value gap. So let's have a look at this algo. After we broke $9, we had the dealing range expansion. Okay, what did we retrace to? Okay, what level did we retrace to? This was the low. Okay, once we had the new Goldbach Dealing Range, this was the low. Which partition is this? Okay, this is the fair value partition. You see? And what do we have in the fair value partition? We have a new day opening gap. Now I'm on the monthly time frame, and I will zoom in for the sake of good order to show you it's a new day opening gap. There you go. That's your new day opening gap. So you can treat new day opening gaps to how you treat fair value gaps when it comes to Goldbach. After we retrace the fair value gap, we expect the algorithm to terminate at the opposing order block, and this is what we hit, the opposing order block. Now, if you had taken this trade, okay, not financial advice, but let's say you took it at the new day opening gap in the fair value partition. Let's say you had your stop at the swing low, and you terminate your trade at the opposing order block. This would have been an 11R trade. Okay. Now, for those who would like more information on this, I have so many videos where I show you Algo 2 playing out on stock. Okay, and on Forex and on futures and all other assets. Okay, so this is the background, okay? Hindsight. Let's go to the charts now, and what do we have? So you understand dealing range expansion now. So let's see where we are. These are our power of 3 numbers. So what is the all-time high of Starbucks? Okay, the all-time high is $126. So we broke $81. So our dealing range high is now $243. Okay, so let's modify our Goldbach range. Okay, this is where we're now playing. Okay, so we rejected off of, we got into equilibrium, slightly into premium, and now we are back into discount. Where do we expect the algorithm to retrace to? Maybe let's go to the yearly chart. Okay, where do we expect our retrace to get to? Okay, according to Algo 2, the fair value gap. Okay, that's where we were expecting our retrace to. Where is the fair value gap now? Okay, this is the order block level, rejection block, liquidity void, fair value. Okay, so we are looking to get down to these levels, and in general this is the fair value partition. So anywhere here is fine as a price target. It doesn't necessarily have to be the visible gap. Okay, this is what we're looking for. Now, this is not financial advice, and I'm not teaching the time component. Time is very important when it comes to every algorithm. And in my mentorship, I teach you time and price. You need both. Okay, but this is the target. Okay, I see Starbucks getting down to $41. And then it's up to you whether you want to long it from there, but that is my target. If you would like to learn more about Goldbach, I have 2 very viral introduction to Goldbach videos that you might want to check out. That should give you the foundational knowledge that you need, especially if you want to do my mentorship. Just watch those 2 videos, then you can sign up and you should be good to go. And then I can teach you all my cheat codes for time and price when it comes to the real way ICT trades and how he trades Enigma.